The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Good morning and welcome back to First Mover. Our next guest is working to address some of the common misconceptions about the world of cryptocurrency. Joining us now to discuss is the author of the new book, Digital Money Demystified, Go From Cash to Crypto Safely, Legally, and Confidently. Tanya Evans, welcome to the show, Tanya.
Hi, Jen. How are you? Thank you for having me.
I'm great. I think it sounds like Lawrence is great too. Thanks for being with us.
Hey, Lawrence.
Hi, I'm here. Hi, good to see you.
You as well.
All right, we want to talk about your book in just a moment, but we have to talk about this excitement around the spot Bitcoin ETF and subsequently a potential spot Ether ETF that we learned about this morning. What do you make of these developments?
First of all, the coverage earlier was fantastic. So congratulations to you all and Nick and everyone for keeping their finger on the pulse. In the spirit of full disclosure, because I think Grayscale is in the mix, I'm also a recent board member for DCG. So just putting that out there. But the recent news that has been reported about the SEC's talks with Grayscale Investments and the coverage that you were mentioning about BlackRock, the conversion of GBTC for Grayscale, but BlackRock entering the chat, that's a really big deal. It's a watershed moment, clearly, for the crypto industry. We can watch the prices as it legitimizes the space for so much of the institutional money on the sidelines. The anticipated approval not only of Bitcoin ETFs, but the reporting yesterday regarding BlackRock and Ethereum spot ETFs that clearly could, and it seems like it has led to more bullish sentiment. Obviously, this could also be in reaction to the natural ebb and flow of bull and bear cycles, but I think that it reflects increased investor confidence, broader accessibility to digital assets without, kind of de-risking the area for those who won't be into cold storage wallets, but do want some exposure to this market. This is all happening in the context of the post-2022 contagion cleanup. We appear to be at the end of that. So, and finally, just on the heels of a Bitcoin halving event in 2024, there's so much focused on positive momentum in the space. So I think it's an exciting time.
I want to draw on your legal background now. I asked the same question to Kenny in our last segment. Is it possible the SEC doesn't approve the spot Bitcoin ETF and all of the wind is just taken out of our sails?
I just don't see a world where that happens, particularly given the fight that the SEC, led by Gary Gensler, fell with respect to the arguments against having. It just never made sense, practically speaking, to have futures ETFs, but not the underlying asset. And so the federal court ruling that the SEC's decisions were arbitrary and capricious, meaning without merit, without foundation, is the signal I think that the industry needed, and clearly that the SEC needed to move forward to probably, now I don't know, I'm just kind of reading the tea leaves to probably have them all done at the same time. I think you mentioned that in the earlier block as well, and I agree. But to have a futures ETF and not a spot never made any sense, and the court agreed.
But is this more of the SEC sort of throwing its hands up in the air and saying, look, we don't care anymore. Like, we're just done fighting this here, and we don't care anymore. You can all rot. And here, you go suffer with this ETF. Good luck, everyone. Hope, don't let the door hit you on the way out.
There's probably a little bit of that. There's a little bit of that.
But I mean, does that affect sort of any kind of enthusiasm into it? If you're an investor and you go, you know what, the only reason the SEC is approving this is because these guys fought in court forever, and it's not like it was a major victory, but it's an arm twisting the SEC into approving it. And why would I want to trust something like this? Between that and, let's face it, the major trials that happened over the past 18 months and are still going on, the Do Kwons of the world, Sam Bankman-Fried, and all these faces of crypto, that institutional investors might look at it and say, okay, fine, you know what, you get a 1%, you get like 0.5% of our portfolio, sure, just to say we're in it. which is not small, but it's not the future of finance necessarily here.
I think you're going to see quite a bit of that, quite frankly. You're always going to see, shout out to first mover, pun intended, but not intended, first mover advantage for some to kind of take on the headwinds to kind of see what happens. There will be institutions that absolutely move forward. There will be those who sit on the sidelines with their, arms crossed saying harumph, not on my watch. The market will decide. The market always does. And when you have hundreds of customers calling, when you have legal and financial professionals left to figure out what to do and realizing that they need to avoid irrelevance and possibly malpractice at this time, it will be those professionals and it will be clients who dictate what is offered ultimately. But I think there will be some cautious enthusiasm and also a lot of cautious hand wringing and arm crossing to not go over this finish line. But the time, time will tell.
All right, Tanya, let's, Lawrence has his arms crossed there. Let's change gears to your book now, Digital Money Demystified. You really set out to explain this industry in plain English to allow, I think one of your motivations was to allow anyone to invest safely, legally. Is it possible to operate in this industry right now, at least from a U.S. perspective, safely and legally without clear legislation?
I think it's a fair question. And so the best way that people can position themselves is to at least separate fact from fiction. This is not an easy space when you think of even how the first cryptographically secured asset, Bitcoin, back in January of 2009, kind of came on the scene with a gangster lean. This was largely the purview of technologists, largely the purview of those who already had a financial background. But as we start to get closer to mass adoption, most people at this point in time, when they first enter, they're not going to fully invest or appreciate cold storage. They're not going to trust themselves because there's a huge mindset shift from trusting other people before yourself with your assets. So that takes some time. But we do want to have people participate in this emerging and nascent asset class because with great risk is also great opportunity as a small part of an overall portfolio. And so that's what I want to empower traditional investors to at least understand what the top 10 or so myths are in the space. And then right-size them, demystify them. Oftentimes there's a kernel of truth in everything. One of the myths is volatility. It's not that this asset class or the ecosystem is not volatile. We saw some incredible volatility on news of the potential approval of spot ETFs, for example. But volatility isn't a bad thing. So in my research, kind of comparing and contrasting other times in history where you have a new asset class, you have stocks, you have futures, you have all kind of swaps and things like that. There's a lot of volatility until, to your point, you have the settling around more settled norms and laws to give people clarity. But I think at the investor level, the writing is already on the wall about participation. It's just how to do so prudently. And that comes from having more information so that you can make good choices.
We have very limited amount of time. You mentioned one of the myths out of 10. Give us some 3 others. Don't give away the whole story because people need to buy the book, right? So three other myths that you see here.
One of the big ones, and I know that you all hear this a lot as well, particularly with the headlines that crypto is only for criminals, which is closely aligned with all crypto, and I'm using air quotes for those who are just listening, is a scam. We have over 30, 35, maybe 40,000 different types of native assets, coins, or tokens in circulation, and that's not even including non-fungible tokens. So I think it's a lazy approach to just say, oh, it's all a scam or only for criminals, when we see companies like Chainalysis working very closely with Department of Justice here in the United States, crypto forensics or blockchain forensics make blockchain assets really bad for criminals. It might be quick on the front end, not great on the back end. So those are a couple. And finally, just that it's only for a certain demographic. This idea of the crypto bro, when you see so many women, at least cautiously optimistic, you see Black and brown communities, queer community taking a second look. And so just broadening the conversation around who this is for and the power and the promise, right-sized with the pitfalls.
Well, I've learned the hard way. Don't talk about crypto bros, particularly on Twitter. They get very sensitive.
They're already coming for me.
They get very sensitive.
That makes three of us.
Frothy, very spicy.
All right, Tanya, thank you so much for joining this show, and congratulations on the launch of the book.
Thanks so much.
That was Digital Money Demystified author Tonya Evans.